Hey guys, Max here, and yesterday was a little bit mad once again. US equities fell, bond yields rose, gold prices shot up once more, and crypto shot up as well. Now this was all predicated on the headlines from the war in Ukraine and oil prices, and while equities ended up down for the day, they had spikes and were far in the green at some points. The real take home here was just that volatility is super damn high right now, and it's wreaking havoc for investors. So what actually happened in detail? Well, the US markets across the board were very volatile. The S&P 500 saw gains of 2% at some points, but then it fell loads, and within the last hour of trading, the index dropped down, so it closed down 0.7% for the day. Now the Nasdaq did basically the same thing, really volatile throughout the day, a strong peak midway through the day, rising almost 3% at its highest point, but then it fell loads, and within the last hour, it was sitting down at 0.3% losses for the day. In Europe, stocks moved similarly, again based on these same conditions. The Stoxx 600 was volatile, of course, and it peaked up at 1.6% but ended down at 0.4%, so losses across the board in pretty much every market. Now, investors and markets were really just struggling to price assets because no one really knows what's going to happen in the short term or the long term. There is loads of uncertainty about. Sentiment is changing seemingly on a dime. Random press conferences, singular words are being picked up on. News stories about war are all causing these wild market swings. And we really don't know when it's going to stop. Now, commodities saw some wild swings as well. Supply and demand for them is also very unclear, both in the short term and the long term. We are seeing huge limitations being placed on Russian exports for many commodities. That's up to 25% of the world's supply. And to make matters worse, these limitations aren't just coming from Western sanctions, but from Russian reactions to those sanctions as well. Futures contracts for a lot of these commodities are moving really high on top of that. There's a high premium for security on these commodity prices. Companies that need security in cost of function have to pay those prices, so they're buying these futures up and driving the price higher. Now, the big, most important commodities to watch right now are, of course, natural gas and oil. Those are the most obvious too. Oil was a big news story yesterday in particular. Biden announced a ban on imports of Russian fossil fuels, which of course includes natural gas and oil. Now, the US doesn't actually import much of this from Russia, so the impact on prices there won't be huge, but that will impact prices a little bit. The UK followed the US's lead, mostly. There's a similar story here, but the UK is a bit more reliant on Russian fuels, so it will take until 2022 ends to fully phase Russian oil out, and the UK isn't banning Russian natural gas imports at the moment. Now, these news pieces scared markets a lot. They indicate that higher costs are coming. They indicate that more inflation is going to continue to come. Our inflation is going to spike majorly over the coming months. This is going to create a tougher economic environment for business and for companies. People are going to spend more money on fuel for cars and heating their homes and less on discretionary spending, which is of course bad for business. And then we also have the fact that higher inflation means higher Fed rate hikes and Bank of England rate hikes and just other central banks in general. They're going to hike interest rates in the future to try and tame this inflation. So that's a big worry for markets, and that caused a bit of a dip yesterday. Now, wheat is another commodity that's a big player right now. Russia is a major food exporter. It's a huge country, and most of it is just fields, and as is Ukraine. Ukraine, of course, can't farm too much right now, and Russia is reluctant to sell us that food, and we're reluctant to buy it. So wheat prices have gone up across the board. Nickel prices, another big player that we saw yesterday. They've seen a massive 250% increase in price over a couple of days. Now, that's a big worry for the manufacture of certain high-value goods like electric vehicles and certain electrical components as well. This will add onto the supply-side shock, the problems that we've been seeing across the world. Expect laptops and cameras and things like that to continue to see delays into the future, and for us to see rising costs as well. Now, there is an expectation of Fed action on interest rates that's worrying markets as well, although only a little bit. If we go back a month or two, this was the huge major fear that was consuming markets. But right now, the markets are just too preoccupied with the effects of the war that we're seeing. The consensus in the past was that a 0.5% rate hike or a 50 basis point rate hike was quite likely, but right now it seems extremely unlikely. We are probably going to see a 0.25% rate hike in March. That is expected, and it's mostly priced in by the markets. To be honest though, this effect is mostly notional. That 0.25% rate hike won't actually help against inflation, but it is the Fed signaling to markets and people that inflation is a problem and it should be tackled, just not quite yet. The big problem here regarding the market's expectations of what the Fed might do isn't the March rate hike, but what comes afterwards. It is certainly possible that we see rate hikes of only 0.25%, but we see them consistently on a month-by-month basis throughout the entirety of 2022. With inflation where it is, actually we should see that, and if the Fed actually cared about inflation, we would. Either way, we are going to find out the Fed's action for March in about a week's time. That is still worrying markets a little bit, even though it's probably not going to be too harsh. Now, bonds saw major movements across the boards once again, with prices falling and yields rising. The big news here is that the EU may release new bonds to finance restructuring of their military and their energy infrastructure, which does make sense to be fair. It could also show that the EU might continue with stimulus for the economy to keep it pumping. This will probably spike inflation again, but markets still probably happy to see that, as asset prices should rise on this news. Now, the US 10-year Treasury yield rose 8 basis points to 1.86%. The German and British yield on their 10-year bonds rose 13 and 14 basis points each, so lots of outflows from bonds. Oil prices are obviously influential in driving markets, but where are they actually sitting right now? Well, higher than the day before. WTI crude is up almost 5% from yesterday alone, and it now sits at $124 a barrel, almost $125. Brent crude rose to $127, but overnight, both of these have started to fall a little bit, thankfully. Gasoline or petrol prices, of course, that depends on where you live, but they're getting seriously high. Gas prices in the US right now are higher than they were in the Will Smith film I Am Legend, a film about a zombie apocalypse that's supposed to show the collapse of the US. That's how much they've been increasing by over the years. This is, of course, very worrying. Loads of people are going to see their costs rising, and there will be far-reaching consequences to this. Now, gold continues to see major gains as well, touching absolute all-time highs in US dollar terms. Per ounce, gold is currently sitting at about $2,060, which is up 3% from yesterday alone, and really damn high to where we've seen it in recent months. There is still lots of safety seen there, despite the idea that's very prevalent on YouTube and on Twitter and things like that. Gold is still seen as an inflation hedge and a store of value. Now, moving on to crypto, what's happening in that realm? Well, markets saw a really strong pump yesterday, some coins rising by as much as 20%. Bitcoin was up 8%, now at $42,000. Ether was up 6%, now at $2,700. So decent gains for the biggest coins. Most altcoins trailed a fair bit, up 5%-ish for the day, like ADA and SOL. Luna, though, saw a major pump, up 20% yesterday alone. But why did we see crypto rise when equities fell? Well, Biden released a statement on his executive order for crypto, and it was earlier than it was supposed to come out. Now, this statement was quickly deleted and they tried to hide it, but it looked mostly positive for the crypto market in the US in particular, which is actually a bit of a big surprise. Personally, I thought this news was going to be bad. Now, the market's like this, and so investors started pumping money into crypto assets and prices rose. The actual important words that we saw from Janet Yellen were calls for coordinated and comprehensive approach to digital asset policy that will support responsible innovation. Basically, this bill won't kill crypto in the US. It should help to regulate the market and allow crypto to grow and innovate and improve the state of things, which is very good news, and of course the markets like this. Now finally, what's the update on Russia? Well, unfortunately, there's nothing huge here. It's mostly more of the same. Lots of companies continue to leave Russian markets. Yesterday saw McDonald's close almost 900 restaurants. Coca-Cola have halted all of their sales in the country, and PayPal have halted all of their operations there as well. Russian banks are seriously struggling. One just opened up a new savings account at 8% interest rates for the Chinese currency yuan. Russian people are trying to get rid of the ruble. No one wants to hold it because of how much it's tanking, and it's going to continue to tank, I'm afraid. And Russia is pushing people towards the yuan as opposed to the dollar or the euro, as sanctions are making that difficult. We are seeing a major de-dollarization of Russia happening right now in front of our eyes. Now, really quickly, I am going to start posting on my other two channels here on YouTube, Stoic Politics and Stoic Crypto. Both should be pretty self-explanatory. For the politics video this week, we're going to look at the Kuril Islands north of Japan and Russia, and Japan spat over them. And for the crypto video, we're going to dive deep into this crypto executive order by Joe Biden. So make sure to subscribe to both of those channels down below. Link as always in the description and the comments so you don't miss out. If you enjoyed this video, then leave a like and a comment to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like insight into my portfolio, and buy and sell alerts for all my own investments. There's a link in the description to masterworks.io, a site that allows you to buy fractional shares of art from world famous artists like Banksy, which can be a great way to diversify your portfolio with non-market correlated assets. It's completely free to sign up, so if that sounds interesting, then make sure to check it out. There's also a link in the description to BlockFi, which will give you up to $250 in free Bitcoin when you use it. You can also get 9% interest on stablecoins like USDC, which is a far higher rate than you get from any savings account these days. Just make sure not to use Tether. Thank you all for the support. Thanks for watching. Stay stoic. Until next time.